Hello students, today in this video we are going to discuss some numericals of cash flow statement of operating activity, financing activity, investing activity and a complete cash flow statement. These numericals helps you to solve the numericals from your book, and all the questions are solved in this are based on DK Goel class 12. So let's start. So cash flow from operating activity. You have to calculate cash from operating activity. In the previous video, I have already discussed the format of this chapter, format of this cash flow statement. So now we are going to prepare cash flow statement. So these are the items of the balance sheet. It is a previous year and this is current year. Operating profit before working capital changes is 1,30,000. So operating profit before working capital changes will be written 1,30,000 in the outer column. Add decrease in current asset. Remember this, if there is decrease in current asset, it will be added. But if there is increase in current liability, it will be added. Okay. So decrease in current asset. Debtors 10,000, check here, debtors in a previous year is 50,000, now it become 40,000, so it will be added, right? Now add increase in current liability, check here, outstanding expenses 800, now it become 1,000, right? So it will be added here. 10,000 plus 200, 10,200 will be added in 1,30,000 become 1,40,200. Now increase in current assets will be less. So current asset include bill receivable 10,000 to 12,500. So the difference is 2,500 will be less. You can keep them into the bracket to show the negative balances or that balance which will be deducted. Accrued income 1,000 and less decrease in current liability, creditors 5,000 and bills payable 15,000. You can check here, the bills payable in the previous year is 40,000 and in current year 25,000. So the difference is 15,000. Total added is 23,500, which will be less from 1,40,000 and the balance will be 1,16,700. So cash from operating activity will be 1,16,700. Okay. So this is the solution of first question. Now 11th, cash from operating activity. You have to prepare from this. So first of all, we have to calculate the net profit before tax. So here you check the profit and loss balance and the general reserve is given. So you have to calculate net profit before tax on the basis of these, because all the balances transfer to P&L balance and general reserve are the part of net profit. So in the previous year it is 60,000 and in the current year it is 65,000. So the difference between is 5,000 and the difference between previous year and current year general reserve is 2,02,000 and 2,37,000. So difference between them is 35,000. Total them, that is 40,000. It will be your net profit for the current year, right? So net profit before tax, here the working note is also given, you can use it, 40,000. adjustment for non-cash and operating items. So non-cash items are those items, those expenses which are less from the net profit, but actually these transaction does not involve any cash outflow, so it will be added back. Like goodwill written off, in the previous year it is 80,000 and now in the current year it is a 70,000. So how much amount is written off? It is only 10,000. So it will be add back. Operating profit before working capital changes will be comes out, and if there is any non-operating gains, then it will be less from this. Now same procedure in the previous video or previous slot, that is increase in current asset will be less and decrease in current liability will be less. So increase in current asset, trade receivable, check here, trade receivable in the previous year it is 1,49,000 and in a current year it is 1,53,000. So difference between will be less. Now wages prepaid, it is also treated as a balance, that is a current asset. So in the previous year it is 5,000 and in the current year it is 7,000. So what will be the difference? 2,000. Now decrease in current liability, salary outstanding, okay, in a current year it is 12,000 and in a previous year it is a 30,000. So difference between them is 18,000. Okay, so here you got your cash from operating activity, right? Now the next question is calculate cash from operating activity from the following, right? Simple. So first of all you have to calculate operating loss or profit before working capital changes. So check profit and loss balance is given and any general reserve is not given. So on the basis of profit and loss we will calculate the operating profit before working capital changes. So in the previous year it is 60,000 and in a current year it is 18,000. So difference between them is in negative, it will be shown in bracket 10,000, it will be loss. Add decrease in current asset. Check where is decrease in current asset is given. Trade receivable is 80,000 to 75,000. It is decrease in current asset, it will be add back 5,000. Add increase in current liability, trade payables, okay, it will be add back because it will increase, and after that total will be 18,000 and the total will be 8,000 because 18,000 is in positive and the profit is in negative. Now less increase in current asset, that is inventory 40,000 and prepaid expenses 4,000. Less decrease in current liability 7,000 and that is outstanding expenses. So negative balance will be written here and the total loss in operating activity is 43,000. So this question is quite simple. You only have to understand what items will be included and what not. Cash in hand is not included in this. It is a cash and cash equivalent part, and goodwill is also not treated because it is not goodwill written off, it is just goodwill. And if you see the increase in goodwill, then it will be the part of investing activity. So goodwill is also not treated here, and written here. Right? Quite simple question. So now we will solve next question. So this is next question. Following is a position of current asset and current liability of X Limited. Company incur a loss 37,000 during the year. Calculate cash from operating activity. Quite simple. The loss will be written as above. Adjustment of non-cash and non-operating items. So first you can discover the non-cash items. Is there any non-cash items? Yes, the provision of bad debt, right? We make provision for bad debt, but no money outflow from the organization for by this. So it will be add back. That is 3,000. And operating loss before working capital comes here is 40,000, right? Because provision for bad debt, okay, provision for bad debt is decreased in the balance sheet, so it will be less here, right? Okay, now add decrease in current asset, debtors 60,000, and add increase in current liability, that is 15,000, 75,000 will be answer, that is 35,000, because 40,000 is a negative and 75,000 is a positive balance. Now less increase in current asset, bill receivable 5,000, and now the cash from operating activity is 30,000. So whatever item is left here, short term loans, it is not part of operating activity, okay, it is financing activity, and overdraft is also not part of this, it is also a financing activity, right? Quite simple. Now sometimes in a question the P&L account is given and you have to prepare cash flow from this or cash from operating activity from this. So first of all you have to discover the items which are included in operating activity. So first of all we have to discover the profit, net profit, and here in the question the net loss is already given, right? Now we go to prepare this cash from operating activity which is based on P&L account. So here is given net loss as per profit and loss statement is 50,000. Adjustment of non-cash and non-operating items. So we have to add depreciation written off. Check here, is depreciation is given or not? Yes, depreciation is given. Here you can see 60,000 and goodwill written off is 40,000. So both the items will be included in this. Okay. Good depreciation and goodwill written off. Now is loss on sales of machinery is given. Check here, is there any loss? Okay, loss on machinery 12,000 will be add back. Share issue expenses written off, it will be also add back. Okay, so all these item is added back to the net loss which is given, and non-operating items will be less here. Non-operating item, that is dividend received 60,000. Okay, so the total will be 77,000 and operating profit before working capital changes will be 17,000 because dividend is also less here. Add increase in current liabilities, outstanding wages 40,000, outstanding salary 30,000, 70,000, and less increase in current asset, inventory 15,000 and prepaid insurance 3,000. So it will be negative balance. Now cash generated from operating activity is 69,000. Right? Now the question is based on the investing activity. The following particulars cash from an investing activity should be calculated. So land and building 5 lakh, machinery 3,40,000 become 4,50,000, investment 4,10,000 and 1,50,000, patents 60,000. Dividend received on share held as an investment 10,000, interest received on debenture held as an investment 8,000 and dividend paid on equity share capital is 50,000. So first of all, purchase of land and building, check here, it will be negative balance because from 0 if you less it is sold. Okay, it is sold or not, so sold is not, so it will be negative balance. Purchase of machinery, purchase at 3,40,000. Proceed from sales of machinery 4,50,000 inflow. Purchase of investment 4,10,000 outflow. Proceed from sales of investment, it is inflow. Proceed from sales of patent 60,000, dividend received 10,000 and interest received 8,000. Okay, so whatever amount is left, that is 50,000, it is not included in this because it is a part of financing activity. So what will be the cash flow from investing activity is 5,72,000. Now X Limited has plant and machinery whose written value on 1st April is 15,40,000 and on 31st March 2015 was 19,10,000. Okay. So depreciation for the year was 1,50,000. In the beginning of the year, a part of plant was sold 2,20,000 which had sell written down value of 3 lakh. Calculate cash flow from investing activity. So you have to prepare plant and machinery account. So balance BD will be 15,40,000. Okay, and here the value of sale you have to check. Sales value 2,20,000. A part of plant was sold. Okay, loss on the sales because the value is 3 lakh and you sold it for 2,20,000. So loss on the sales and the loss will be debited. Depreciation is given, so depreciation is also loss, it will be credited, and by the balance CD will be calculated on the basis of this, that is written here 19,10,000 right off here, and the balance will be find out total of this side and total of this side, the balance will become 8,20,000. Now on the basis of this you can calculate cash flow from investing activity. Proceed from sales of machinery is 2,20,000. Payment for purchase of new plant and machinery is 8,20,000. So net cash used in investing activity is 6 lakh. Now the next question is calculate cash flow from investing activity from the following information. Investment in land 16 to 6 lakh. Okay, it is a previous year and it is current year. Long term investment 4 to 2,50,000. Plant and machinery 2 lakh, 3 lakh. Goodwill 1580. Information, a machinery costing 40,000. Depreciation provided thereon is 12,000. Was sold for 35,000. Depreciation charge for the year is 60,000. So on the basis of this information we calculate cash flow from investing. Okay, So solving this question is cash flow from investing activity 10 lakh, sales from long term investment is 1,50,000. Check here 1,50,000, and interest on long term debt, long term investment. Okay, so here working notes will be checked. Balance BD is given in the question. Okay, balance BD is given in the question here, and CD is also given, right? So BD and CD is written here, BD and CD is written here. Sold for 35,000, see in the question 35,000, and depreciation is 60,000. Okay, statement of P&L is 7,000. Statement of P&L is 7,000. So the balance account will be purchase 1,88,000 written here, right? And interest on long term investment is for 4 lakh 10%, that is 40,000. Okay, sales of plant and machinery 35,000 and purchase of goodwill is 65,000. So net cash used in investing activity will be 10,28,000. Okay, quite easy. Calculate investing activity and financing activity, both are given. So you have to calculate. First you have to calculate investing activity. So check here. Plant and machinery is given. Okay. Accumulated depreciation on plant and machinery given. 8% debenture, bank overdraft. During the year, machine costing 1,50,000 was sold at the loss of 44,000, and the depreciation on plant and machinery charged during the years is amounted 80,000. Interest paid on bank overdraft is 28, and debenture were redeemed on 1st October 2017 at premium of 4% written here. So sales of machinery, you have to check 74,000. How you will be calculated? You have to make machinery account, right? Make a machinery account as in previous question. Write down opening balance and closing balance and you will got 74,000. Purchase of machinery is 3,30,000. 3,30,000. Plant and machinery 10,30,000, 8,50,000 you can find out easily. And after that, net cash used in investing activity is 2,56,000. Redemption of debenture as in financing activity. So redemption of debenture given here 1,50,000. Debentures amount is given here 1,50,000 and plus the interest of premium that is given here. So write off interest paid on debenture, quite easy. You have C, the 8% debenture is given, so 8% will be proceed from bank overdraft. It will be added because it is inflow, and interest paid on bank overdraft is outflow, that is 28. So net cash used in financing activity will be 1,28,000. Now we have to prepare the complete cash flow statement on the basis of the balance sheet which is given here. Okay, so you have to prepare cash flow statement from this question. This is homework for you, and after understanding these questions you can easily calculate cash flow from this all investing financing activities of the organization. This is from your DK Goel. You have to complete it and check it from me. Thank you. Have a nice day.